again. This is Ana Escarzaga from ReMax Island Properties, and today we have Aldo Heberlein in the spotlight. Aldo is a mortgage broker and he owns Primaria Mortgages. Hi, Aldo. Thank you for being here.
Hi, Ana. Good morning. Thank you for having me.
Thank you. Aldo, the first I want to say is I have a lot of important questions, so I wrote them. So if you see me turning around, it's not my phone. I'm just checking to the questions because this is a very important subject these days, and I don't want to miss anything.
Sounds great.
Good. So let's start with this. You are from Mexico City, correct?
That is correct, from Mexico City.
And tell me more about it, because you studied in UBC in Vancouver, and then you moved to Norway. So basically, you speak 4 languages?
Yeah, it's a bit of a long story, but like many immigrants coming to Canada, coming here looking for a better life, I came here in 2005 and I studied mechanical engineering at UBC, and that's where I met my girlfriend at the time, my wife now. She's Norwegian, and I met her in 2009. And 2011, I decided to move to Norway. I thought I would never come back here for one or another reason. And 2017. We came back. And yes, along the way, I was in Norway, I was in Singapore, I was in France. And yes, I studied at German school. I lived in Norway. I speak English. I grew up in Mexico. So yes, I do speak 4 languages.
So you speak Spanish, English, German, and Norwegian?
Norwegian. That's correct, yeah.
And you kind of understand Portuguese maybe, or?
If a person, if the person speaks slowly enough and I speak slowly enough in Spanish, we can understand each other.
As a business owner, let's change the topic. Not as a business owner, because we know you're the owner of Primaria Mortgages, but as a mortgage broker, what is the challenges or the most common challenges that you find when you're trying to get financing for your client?
There's a number of challenges. The first one of all is just affordability, right? In the areas that we live, Vancouver, Victoria, prices are just so high. So the number one challenge that I find with people is not that they don't work, not that they don't have income, but it's just that the income that they have to show to be able to qualify for the purchase that actually satisfies all their needs, it's difficult. That is the number one challenge that most people face. But then, assuming that we can show sufficient income for a family to buy a home, for example, something that can be very challenging is we need to make sure that the clients are prepared. And when I say prepared, is they have a proper pre-approval, not a fluffy pre-approval. And we can talk a little bit about that, pre-qualification versus an actual pre-approval. So proper pre-approval based on documents, based on application, based on a thorough review of the credit check.
Okay.
And based on a thorough understanding of what the client's situation is and what their goal is. And why is that important? A number of reasons. One of them is in an environment of increasing interest rates like we are right now. Mm-hmm. If you don't have your pre-approval and then the rates go up, you may be out of qualification again, right? Because you didn't hold on to your rate. Another one is if you don't have the documents up front and you go out and make an offer, and maybe you're competing against 3 or 4 other people making an offers, mm-hmm. and now you need a 2-week subject removal period. That's going to be tough. And the third part of it is you're going to be very stressed. If you didn't get your rate hold, if you didn't get your documents in place, and now you're competing and you don't know exactly how much further you can go in your purchase or in your offer and all of that, you're probably going to lose out. So for us, it's super important that clients be properly prepared. There's a saying in the industry that says, no doc, no talk. We don't fully subscribe to it because we do want to provide the best service and provide information as well as we can.
Okay.
But once we're talking about a pre-approval, then yes, we do need to see your documents. We do need to review them and understand. More than anything, probably to not disappoint the clients, right? This is what you actually can afford. This is based on solid information. We're not daydreaming here. This is what it is.
And this brings me to a question. Okay, so when you run a pre-approval and the client gives you all the documents, you mentioned about you fix the interest rate. So if today the interest rate is 5.4, but for a miracle, by the time I purchase, the interest rate goes down to 4.5, I have 5.4. So what happened?
Well,
what happened to
that's
the interest rate?
That's the nice thing about a pre-approval. It protects you when rates are going up. and it gives you a higher limit. But if rates continue going down, or for some reason they turn around and they go down, we'll get you the lower one. That's no problem. And let's say 3-4 months down the road, if you haven't found the right property, we can pre-approve the clients again, find a new rate. If the rate is a lower one, we'll hold that rate.
Well, and unfortunately, if the rate is higher, you have no choice but to do it higher.
Yeah.
And what is a pre-qualification? That everybody says, yeah, I'm pre-qualified, but what is a pre-qualification?
You tell me right now how much you earn, how much savings you have, and if you have any debts, I can tell you in about 20 seconds how much you can afford. That's a pre-qualification. So it's just based on the verbal information the clients provide. And that's not to say that clients are not saying things that are true. The thing is, what we receive into our pocket, what we earn on a yearly basis actually into our accounts versus what a lender might approve or actually confirm that is indeed the income of the person, can be quite different, especially for business owners, especially in industries where perhaps there's cash payments, etc. So if a person is not just full-time employed, guaranteed, fixed income, then if they tell me I earn 100K and their letter of employment states I earn 100K, it's very straightforward. But if someone earns a bonus, if someone earns commission, if someone gets tips, if someone has a business and they are deducting a lot of their income for taxes, that's where you can find big discrepancies in the income that the client claims they receive and the income that the bank is actually going to approve. And that's why things, you can get into really bad surprises where a client says, hey, I make 100K. Okay, sure, let's pre-approve. We look at the documents and in reality, we can only show 50. Well, that's going to be a big disappointment. And that's going to discourage the client. That's going to disappoint the realtor. It's going to, it's not going to be good for anybody's time either. So best thing to do is to do it properly up front. And that's the difference between pre-qualification and pre-approval. Pre-qualification is very quick, it's very loose, it's fluffy. Pre-approval is a way more solid confirmation of the income and the actual purchase power of the person.
Can you tell me a little about the stress test? I know that local lenders, sometimes they don't use the stress test. If you can explain us what is the stress test and these local lenders that they don't use it, why is that?
So the stress test is a measure by essentially the government of Canada to protect borrowers from increasing interest rates. So the idea is if you want to qualify for a purchase at a rate of, let's say, 6%, we're going to qualify you at a rate 2% higher than that. Why? Because you should be able to sustain the payments at a rate that is higher to protect you. So to give insert a little bit of conservatism into the qualification of the person. Should things change, should the rates increase, you can still manage those payments. Basically, every institution that is federally regulated has to implement the stress test. And anytime that a mortgage needs insurance, in other words, whenever you're making a high ratio purchase, or in other words, a purchase with less than 20% down payment, you have to have mortgage insurance. Mortgage insurance is provided by federally regulated institutions. They need to have the stress test. So why could that be different when it's local? The reason is that might be the credit unions that are doing that. And the credit unions, in many cases, they work just like a bank. The big difference being that they're regulated provincially, not federally. Okay. So because they have the provincial regulation, and when you have more than 20% down payment, they can apply different rules. And one of those rules might be we're not going to do any stress testing. And that 2% difference in terms of at what rate am I using to qualify the client can make a very big difference. So long story short, yes, credit unions, they're provincially regulated, and as long as the mortgage is not insured, they can have different qualification measures, different ways to approve clients, and that may include not using the stress test. Not necessarily everybody, because credit unions, they vary a lot in shapes and flavors and reach, but you can find it.
Okay. You work with some credit unions?
With a lot of credit unions. And probably the main thing of credit unions to watch out for is where do they actually operate? Because I might be thinking, hey, there's this great credit union that works in Victoria and it's super good and they have really, really good programs. But then the client says, hey, I'm actually looking at Duncan.
Okay.
Well, that may be out of the lending area of the credit union. So we have to watch out for those things.
Okay. So I have here 2 comments for the people who's watching us. For not having the stress test, first, I need to have the 20% cash down or more. That is not always in the case. And second, in reality, the stress test is protecting me in the case that the interest rate goes high when I need to renew my mortgage. Because if I am not qualified because of with my income to pay a higher interest rate, I'm just going to lose my house. So I think it's very important to stop demonizing the stress test, because in reality, the way you explain to us, for me, is more a way to protect the public in the case that something happens with the economy.
Sure is. That's the idea. Of course, if you ask people these days, how protected do you feel by the stress test?
Yeah.
When, if you close your mortgage, let's say 2 years ago, or, right during the height of COVID, and you got a rate of 2%, and if you were to refinance right now, you might get a test of a rate of 6%. The stress test didn't do much to protect you, right? But
Yeah.
But yes, the idea is that it will protect you, that it's there to cover you in case of a sharp increase in rates, sharp change in economics and circumstances, even in your own personal finances, right? So the way you're qualified is based on your income. Your income is used against mortgage payments that are qualified at a higher rate than your actual contract rate. So should you lose some of your income, in principle, you should still have a little bit of leeway to support those mortgage payments.
Okay. A lot of people think, because that you're going to be promoted in Victoria, in Fairfield, and in James Bay, and in the community that I am the ambassador in. And so a lot of people may think that they need a local lender, someone that is in Victoria, but I know that you provide a lot of mortgages here in Vancouver Island, even if you're in Vancouver. So do people need to meet you in person to get the approval of the mortgage, or they can do it just the way we're doing it, or how it works? Do I have to meet you, go for coffee, or?
Not if you don't want to. The reality is that I probably meet maybe 1% of my clients in person during our mortgage discussions.
Okay.
Once everything is said and done, if we meet for coffee, if we meet for a dinner, if we meet something like that, it's great and we do it. But for actual work, I maybe meet 1% of my clients in person. Generally, the ones that are more sensitive about providing information online or over email, over platforms, and they prefer to bring it on paper, and that's it. Otherwise, I do 99% of my work online on a video like this, or over the phone and email. And I think that's important on a number of fronts. One of them is the client doesn't have to go anywhere to work with me.
Yes.
They can do it from the comfort of their home at 8 p.m. on a Saturday, if that's when they have the time. They can be actually working on their mortgage without interrupting their business hours or their work hours, without interrupting, their weekdays or anything. So they don't have to get out. They don't have to shower to go and meet someone. You don't know if it's going to work. Do it from the comfort of your home. The other part of it is, and that's why if I'm going to meet someone in person to discuss business, I say, please come to my office. Because when a client is actually writing an offer and they're looking at you to get their financing, they need that financing done yesterday.
Yes.
If I am out meeting people for coffee, stuck in traffic, chit-chatting here and there, and the client calls me, hey, I have an accepted offer, where are you? I always say I'm at my office and I'm ready to go, and you don't need to meet me, and I don't need to meet you. I'm ready to submit your application. I think in the beginning, it can be a little bit difficult for clients to say, hey, how come we're not going to meet? Because when the time comes and you really need me, you don't want me to be meeting other people. You want me to be at my desk working. So that's probably the main thing, in that for us to be able to provide a good and timely service, we need to be on our computers. And luckily these days we can do everything online. We can do everything through video calls, through DocuSign for digital signatures, on WhatsApp. Most of my clients I communicate with WhatsApp too. And we share video messages and voice notes and documents. And so there is a lot of closeness with the client, just not in person.
And I think it's fantastic because maybe I'm on vacation visiting my family because we know that this wonderful country is made of immigrants. So the majority of the immigrants, the first time buyers, I don't know, maybe I'm visiting my family in Mexico or I'm in Germany or I am in France or I am whatever and I want to get pre-approved and I just have my computer and I have to meet with you. So this myth of I need to sit is I think it's over, but
Yeah.
again, I think it's a good reminder to everybody that you're here, business hours all the time, working for them, and not driving in the traffic, so you cannot check the documents that they need to check. Aldo, tell me a little more about your private life. So you're married, you have kids. What do you like doing when you're not working?
I am married. I've been married for 5 years now, I guess.
Mm-hmm.
I do have two kids. One is a 3-year-old boy, and the other one is a 1-year-old boy. So when
Congratulations.
I'm not working, that's really what's consuming all my life, right? Just the regular day to day of being a dad and being a husband and preparing food and playing with them and entertaining them and otherwise working. So the stage of my life, the stage at which my kids are, of course, any parent out there knows that it's very time consuming, knows that it takes everything, and that's where we are. But we're happy with it. We know it's temporary. We know that down the road, we're going to have a little bit of free time to ourselves as well. And when that time comes, what are the things that I enjoy doing? I enjoy working out. I enjoy being out in nature. I enjoy reading. And basically just spending time with friends and family. I mean, no secret. Hopefully, I'll get to ski some more because that's something that I actually quite miss to go downhill skiing.
Well, when they are old enough, means when they are 3 years old, maybe they can go to the ski school and then you will be skiing a lot more. But you go hiking with the boys. I mean, you go outdoors with them. You're not all the time.
Yeah, so I carry them. They come with me and we carry them and we prepare all the food and lunches for them. And it's a lot of fun. It's a lot of work too, but it's a lot of fun.
Oh my God. Babies are amazing. Aldo, thank you very much for this. If you have only one piece of advice for someone that is thinking into buy a property, maybe it's a newcomer, maybe they just start working here in Canada, maybe it's a Canadian, maybe someone from Victoria but is young, do you give them a piece of advice as of can they speak with you even if they are planning to buy in 1 or 2 or 3 years? Do you think it's important to speak with an expert like you to start planning their finances and when they are ready in the future to purchase? What would be your advice on it?
Yeah, of course. Generally, especially for a newcomer, my number one advice would be get a couple of credit cards.
Okay.
Because when you have absolutely no credit history here, the way that lenders say, okay, this person has a sufficient credit worthiness is they ask, do they have at least 2 credit facilities? It can be credit cards, it can be a car loan, it can be a line of credit. So get at least 2. If you don't use the credit cards, that's okay. Stash them in your drawer, but at least get them in place and maintain low usage of it. So if you have a limit of $10,000, try to keep it under $5,000, 50%. And just keep paying it on time. So that is going to build credit for them. Another piece of advice is, and it happens often is, some people are looking to, maybe they came in with a job and maybe now they're looking at going independent, have their own business. Yes, speak early with your lender, speak early with someone who knows about the implications of that, because maybe you qualify for a purchase today,
Okay.
but then you switch to being a business owner. And now you have to wait 2 years before you can show the income that you're producing as a business owner before a bank is going to accept that income. So yes, you can plan those things out, build your credit, speak to ideally a mortgage broker. That's another advice. Don't go to a bank. Speak to a mortgage broker that can represent you with a number of different banks and get your plan in place. Hey, this is what I want to do. This is my situation. I want to achieve X. What do you have to do? Well, you have to do A, B, and C. And then you can have that in place, right? To elaborate a little bit on why a mortgage broker and not a bank.
Yes, please.
A mortgage broker is independent. A mortgage broker works with many different banks, but it's not an employee of those banks.
Okay.
A mortgage broker main job, main purpose is to be there for their clients, to give information, to give advice, to give options. At the end of the day, receive their instructions.
Okay.
And we can compare with many different lenders. And so why would not be such a good idea to go to one bank? Well, of course, the employee of the bank is going to tell you that the products of that bank are the best. Sometimes they are, sometimes they may be, sometimes they're not. But they're not going to tell you that they're not.
Of course.
Another thing is, where does the loyalty of that person or the mortgage broker, where is their loyalty? As a mortgage broker, we are only paid if we help people get good financing in the best of terms, and that mortgage actually closes. That's when we get paid. It doesn't cost the client. Where does the bank employee get paid from? From the bank. So what's their allegiance? The bank, because that's the hand that feeds them. So they have two sets of priorities. One of them is to satisfy the priorities of the bank. Another one is to satisfy the priorities of the client, but sometimes they clash. The other thing is, if you work as a specialist at a bank and you sit at a branch and it's RBC is very well known. Clients just come in. And they come in and they come in and they come in. You don't have the time. You can't dedicate enough time to explain to them the difference between product A, B, or C, or why you might take this over that, unless you ask.
Okay.
If you ask, they're probably going to tell you. But the problem is, when we're new to this, very often you don't even know what to ask.
I agree.
So if the information is not offered up front, it's not given freely to you, you might make bad mistakes. The simplest is, hey, I took a 5-year fixed when my plan was to sell after 2 years, and I got a huge penalty that I didn't know about. Well, why were you put in a 2-year fixed, in a 5-year fixed, when you were planning to put to only own for 2 years? And if you didn't have the initiative because you didn't know about it, and it's not your job to know about it, how do the penalties work? How do I trigger it? How much is it? Then you can get into a very bad surprise that in principle, should have been the bank person's job to tell you about it. But because they're looking at so many people so quickly, and because they have to satisfy quotas to their managers, they didn't care to tell you, okay, you're dissatisfied. Guess what? There's still others coming down, through the door. So, it can be costly.
So you as a mortgage broker always take the time to explain your clients everything, every possibility, the 5 years, the 3 years, the 2 years, and why, and where are you planning to sell or not. Answer me this, because the first that I think it's a mistake, but please correct me if I am wrong. The first mistake that people do is they arrive here, or they are young and they buy a car with monthly payments. It's only $600 a month. It's okay. How does my monthly payments buying my car can affect my approval, my pre-approval for a mortgage?
It makes a huge difference, actually. So if you have, let's say, a $500 car loan, you can, in many cases, your mortgage capacity is reduced by about $90,000 to $100,000.
Only for that? Wow.
Only for that. So your payments are $6,000 a year. Mm-hmm. Your mortgage capacity got reduced by $90,000.
So if I want to car, your suggestion is to buy cash or a small car or a less expensive car. In the meantime, I qualify for my mortgage and wait a little, or what would be your advice on that?
Plan it. Meet with your broker and plan it and say, hey, this is my circumstances right now. This is what I want to achieve. Do I have space for a car here? And how much would that impact me? Well, yeah, yes, you do, right? Or, hey, can you hold off on the purchase of the car for 3 months or 4 months until after you've completed your purchase? Because once you've completed the purchase, nobody's going to care that you bought a car. But if you do it before, it can really impact you. So obviously, if you can pay cash, then it won't affect you as long as it doesn't eat up on your down payment. Obviously, if it's a smaller car, the smaller the loan, the smaller the effect. Obviously, if you have a very huge income, $500 a month are relatively very little and may not affect you as much, right? But, just discuss it with someone who can tell you how it impacts you and make a more informed decision on that car.
Good. Aldo, thank you very, very much for your time. If people want to reach you, do you have an email or a website or a telephone number that people can reach you?
All three.
Okay, give it to them.
So yes, phone number 778-867-2536. Can reach me anytime, SMS or WhatsApp.
Okay.
Website, so it's primariamortgages.com, but we also have another website that probably has a little bit more information and explains a little bit more about our processes. My Mortgage Doc, as in doctor, mymortgagedoc.ca. And the idea behind My Mortgage Doc is we want to be able to provide doctor level advice. This is why we think you should do this.
Okay.
These are the reasons. These are the options. This information. Here's information that we think you should really know, even though you didn't think or didn't know that you wanted to know it. And at the end of the day, we receive your instructions. So unlike a doctor, we do not prescribe. We're going to tell you to do this. No, but we want to give you doctor level advice so that you can make an informed decision.
Aldo, thank you very, very much for your time. And guys, if you're planning to buy in the future, in the near future or in the long future, do not hesitate to contact Aldo. If you are not very good with the English and you want someone that can speak your language, do not hesitate to contact Aldo. And Aldo, thank you very much for your time. This has been an amazing interview, and I hope to see you soon.
Thanks to you. Thanks so much for the time. This is really great.
My pleasure. This was Ana Escarzaga from ReMax Island Properties, and have a great day, everybody. Bye-bye.
Thanks so much. Bye-bye.